Now, our favourite guy, Eddie Gabor, is back. Well, not exactly our favourite guy, but he has been right consistently, and that's a pretty good thing. Eddie, are we going to hit new lows before we hit new highs?
I firmly believe that's what the play is going to be this year, probably in the first half of this year, Stuart, as we've said. And it's very simple, and this is where the debate is right now on whether you're bullish or bearish. It's as simple as coming down to whether or not you think we're going to have a hard landing economically, or you don't think we're going to have a recession. If you're in a no recession camp, then you're probably buying dips and you think that it's a bullish setup. I don't see it happening. I mean, the bond yields right now are really telling a story that they're seeing significant slowdowns looking forward. That's why the 10-year has really collapsed. The other thing is you're seeing these layoffs. Companies aren't laying people off and cutting costs because they think there's a soft landing. And then lastly, the bulls are saying that it's going to be a soft landing and the Fed's going to cut rates. My question to them is, why would they cut rates if it's going to be a soft landing? So I don't think they're cutting rates. I think more layoffs are coming. The yield curve is saying crystal clear that we're heading into a recession, and it's not priced into the market. So if we're right and we go into a recession, we're going to hit new lows.
But it's not cutting rates that the Federal Reserve is expected to do this year. It's just slowing down the rate of increase. And there's a huge difference. If you perceive that the rate of increase is slowing down, that's not quite a pivot, but it's an easing up on the nasty stuff, and that could produce a nice rally in the market. You discount that completely?
I don't discount anything completely, but that's already priced into the market, right? We already know, or feel like we know, they're going to go to 25 basis points, which is significantly different than where they were before. But the rates are going to stay high for the foreseeable future. And these companies that have to refinance debt at a higher rate, that's going to really cripple them. And then look at housing. New home sales are collapsing. And housing is a sector that touches more parts of the economy than any other sector. And that's just now starting to show weakness. So I think housing is going to continue to get weaker this year, which is going to accelerate the recession, in my opinion.
So you think the S&P 500, which is now almost exactly at 4,000, you think it could go down to what, 3,500?
I think we could get to 3,200, Stuart. But I would be buying before it got to that levels, because that's correct. Look, this is a bigger bubble than 08 and 09, and I don't see why people can argue against that. Look at what crypto did. Look at how housing accelerated. Look at these mega cap tech stocks. They're still not even the pre-COVID levels. And we have a lot of earnings coming out over the next 2 weeks, which is going to give us the direction of the market short term. But this is not a growth environment, and I think a lot of these stocks are going to go to pre-COVID levels, and people are not pricing that in right now.
Ouch. Well, you've been right up to a point so far. I hope you're wrong now, but let's see how we go. Eddie, thank you, sir. See you again soon.